costs. So the front-end costs in a Reg S are generally lower than in the other types of offerings, as I touched on earlier on. Probably the lowest cost of entry for a good PPM for a Reg S is going to be about $10,000, unless you already have one that you already built for some similar purpose, in which case repurposing it will cost less. It can cost more. You can make it unbelievably complicated and comprehensive, then it'll cost more. It could be 30K, but 10K is reasonable. Marketing setup, 25 to 35K is reasonable, depending on the specifics of which agency and so forth. So the total front-loaded expenses, you don't need audited financials to do a Reg S, as in a Reg D. You don't need audited financials. But the total front-loaded cost may be in the 50 to 75K range. That's realistic. I was talking to a company late last week that's pretty compelling, actually, and they've been raising money in a Reg D via direct means, and they're exploring doing it online with us. And I like the company. It's a pretty compelling company. It has a lot of potential. So in their case, they already have a PPM. It's well drafted, so the editing of that is going to be quick and very inexpensive. That's good, helps save time. Still, the messaging and marketing stuff needs to be created, though. So actually the biggest issue I haven't touched on yet, which is the cost of conversion, right? What's the cost of converting prospective investors into actual investors? So this varies greatly. And of course, it varies greatly by country. Going out internationally, there are countries where the level of sophistication of the audience is not there yet, where they're ready to invest online. We have a thing called Manhattan Street Fund LP, a venture fund, which we use to invest in companies from time to time. And we did interesting test marketing it internationally for a while. And we were getting amazing engagement from people, but they would be asking us to email them the package or mail them the package because they weren't comfortable with actually investing online. So obviously that's a factor, right? And it does change with time. The maturity, the online comfort of investors in different countries is developing at a different schedule. So countries like the UK, Germany, Scandinavia, Norway, Sweden, Denmark, Australia, Canada when it's appropriate, and Dubai. Those are sweet spots. But then, of course, where you have a presence will be a big factor also. Good that you're putting questions in. Well done, guys. Keep that up. I'll get to them shortly. How are we doing on time? How are we doing well? Yeah, so marketing efficiency, going back to that, that's a difficult one. It's really important. So at this stage, I haven't done enough. We haven't done enough pure Reg S's that I can just rattle off numbers and give you, hard facts as to what exactly it's going to be. And of course, it isn't exact at any time, right? Your company is different than the other companies anyway. But in the early days, we will get traction, we'll get early engagement, we'll get early investments in a Reg S because people don't have to be wealthy to invest. The people who engage online in an offering have to be optimists. Let's face it, right? Especially if they're looking at a company that is outside of their country. They can't touch and feel it. They're not really likely to pay you a visit. So they're optimists by nature. They're usually male. But nevertheless, even though we have a lot of experience with Reg A plus investment activity, and again, we're dealing with mostly male audiences, and they're optimists. Otherwise, they wouldn't even be considering investing online in a company. But having said that, though, the proclivity, the likelihood that they will invest in an online company offering varies by country, et cetera, et cetera. So what does this all mean? It says to me that I would expect that in the first month, you might spend $10,000 in advertising and you might raise $10,000 or $20,000 or $30,000 in investments in the first month. No guarantees that that will happen, but in a properly prepared offering that is appealing, that passes muster based on the other things I've described, that's a reasonable expectation. Horribly inefficient, of course, but that's why you don't spend a lot of money in the first month. And as we get the targeting and the advertising and the AI in the social media platforms. In this country and in many countries, Facebook and Instagram are really very efficient vehicles. When we can get it to work, when we can get into TikTok, it's by far the most cost efficient vehicle. But again, it depends on which country we're in. There are different platforms that excel in different countries. But long-winded way of getting to the point, which is that we strive to get the efficiency as high as possible. So if we can get the advertising cost, the pure media spend, down to below $10 per 100 raised, then we should feel good, because that is difficult to achieve. And if we get to that, we should feel good. Of course, we want to get it lower. We worked with a biotech company in a Reg A plus context a while ago, where the ad agency was happy, and frankly, the company was pretty happy, because the cost of advertising was about $8.50, $9 per $100 raised. It wasn't bad. It was pretty good. But I felt that we could up the ante by doing more video ads, and the agency was reluctant. So I asked the company to back me up in this, which they did. And then the agency reluctantly came around and did video ads, and they ended up with one particular 8-second animated ad getting the cost down to $3.30 per 100 raised. With that single ad, that was absolutely stunningly efficient. Of course, I didn't know which ad was going to do best. I didn't know how much efficiency we could gain, but I was pushing to do so, and the results were phenomenal. So that's just the nature of the beast, right? It's all about execution, creativity, upping the ante. Min-max, you can have a zero minimum, which is to say, you could set the offering up such that if you raise $10, you could do an escrow close. Why would you? But you don't have to have a high minimum investment amount, unless if you're raising money in order to buy a company or a building. If the price is $10 million, then you have to have a $10 million escrow closing amount, right? But in a grow the company strategy, which is what most people are doing, then you can be drawing down escrow week 1, week 2, etc. And there is no absolute maximum amount you can raise in a Reg S. The only thing you have to deal with is the numeric count of investors, which I touched on earlier, and the logistics of that. But actually, most companies who go into these online raises are very nervous about having lots and lots of investors. But actually, my experience has been that lots of investors is a very good thing. And most investors are not expecting to have a CEO discussion once a month, once a week, etc. Most of the Main Street investors putting in modest, smaller amounts are very easy to deal with. And really, you end up delegating most all of that to the transfer agent. If you're paying out dividends or profit distributions, you can do that through the transfer agent too, by the way. So to simplify life from an operational standpoint. One thing that does matter in any of these online raises, but especially in Reg S and in Reg A plus, is to have a low per investment minimum. And it depends on the country. If we're raising money, if the Philippines was a big target, I haven't recently checked the numbers, but the average income's a lot lower, GDP per capita is a lot lower. So if you were to set a minimum of $1,000, that would put off most investors, right? In the Philippines, maybe $100 would be a smart number, or $200. In the Philippines, if you go to Germany, France, well, less so France, go to Germany, the UK, Scandinavia, Australia, less price sensitivity. But bear that in mind. The point here is that if you think of this, the psychology, somebody's doing something else. They're in their social media stream. They're not thinking about your company. They're doing something else. They see a compelling ad. They click on it. They come to the offering page. It's interesting enough to gain and keep their interest. Now they're looking to see, they're thinking about investing. We're converting them from unaware and uninterested to interested enough to stick around. If you present them with a high investment minimum, like something that feels like 5 or 10K to them, feels like that amount of money to them, at this stage it's casual. If you have such a high number, they're going to go away and not come back. We need to have a low enough minimum that they'll stay interested and stick around. So think about that psychology, yeah? Typically what happens in these online raises is that people will start an investment, maybe complete it with a relatively modest sum, and then they'll stay engaged and they'll up the ante, and they may come in with their retirement account with a much larger number 4 months down the road.